So good evening students, welcome back to my channel. Okay, so today I'm going to do hire purchase system. Okay, so it is illustration number 17 from B.B.Dam book. Okay, so I have done asset accrual method, yes or no? Under hire purchase system there are two methods to record journal entries in the books of hire purchaser. The first one is full cash price method and the second one is asset accrual method. Okay, so I have given you the journal entries also. You can check out my previous videos. Okay, there you will find the journal entries passed under asset accrual method. Okay, so now here I'm going to do illustration number 17 from B.B.Dam book. Where you have been asked to, or where it has been asked to pass journal entries in the books of hire purchaser under asset accrual method, and ledger accounts to be prepared, after providing depreciation at the rate 20% on diminishing balance method. Okay, so you just see the sum. Here it is said that on 1st April 2016, Tata Company Limited purchased a machine worth rupees 45,000. So what is the cash price of the machine? It is 45,000. Okay, on hire purchase system, an amount of rupees 6,000. 6,000 is the amount of down payment. Was paid on delivery, and the balance in 5 installments of rupees 9,000 each. So the value of each installment is rupees 9,000 and the number of installments is 5. Payable on 31st March each year. So year ends on 31st March every year. Any difference in the 5th year's amount should be suitably adjusted. You have to deduct the 5th year's installment amount, and the balance remaining. So whatever is the balance, at the end of calculation of interest, that should be deducted from the 5th year's installment, that is rupees 9,000, in order to get the interest amount for the 5th year. Vendor company charged 5% interest. So what is the rate of interest? It is 5% yearly, on yearly balance. You have been asked to pass journal entries. Prepare ledger accounts. Under asset accrual method. It is under asset accrual method. After providing depreciation. What is the amount of depreciation? 20% on diminishing balance method. Means every year the value of depreciation will go on decreasing. So it is 20%. So interest calculation you can do it by yourself. Yes or no? The cash price is given, less down payment. Then you have to add up interest. At the rate 5%. Then you have to deduct the first installment, then again add up interest, then less second installment. So this is how you are going to calculate the amount of interest. You are going to do it by yourself. Then depreciation, it is 20%. So 20% on 45,000, it will be 9,000. So you have to deduct 9,000 from 45,000 in order to get the balance. Then for again the next year, you have to calculate 20% on the balance, since it is diminishing balance method. So this is how you will calculate the value of depreciation. So year after year you will calculate the value of depreciation for 5 years. Now you see under asset accrual method, in the books of hire purchaser, what is the journal entries? Now like under full cash price method, for the purchase of asset, we pass journal entry, yes or no? Like machinery account debited to hire vendor account with the with the amount of cash price. Okay, but here no entry is passed, okay, when the asset is purchased. When the asset is purchased, no entry is passed. You see, on 1st April, so on 1/4/2016, okay, it will be, okay, for the journal entry will be for the amount of down payment. So machinery account debited to hire vendor account. So what is the amount of down payment? Rupees 6,000. So that you have to write. Okay, machinery account is debited by 6,000. It is an asset, okay, asset of value. 6,000 comes into the business of hire purchaser. So asset position goes up. So 6,000 is debited to hire vendor account. Liability also goes up. So 6,000 position is credited, okay, with the hire vendors account. Then on the same date the amount of down payment is paid. So liability decreases, so higher vendor account debited to bank account. Okay, now at the year end, that is 31st/3/2017, okay, machinery account will be debited, interest account will be debited to higher vendor account. In full cash price method, we have just written interest account debited to higher vendor account. But with the portion of cash price of the uh, asset, okay, in the value of installment, okay, machinery account will be debited. So it is 7050 will be debited. And what is the interest for the first year? I have asked you to calculate the value of interest for each year. So you have to calculate the value of interest for the first year. It is 1950. Okay, so when you add up both the figures, higher vendor account is a liability account, so it will be credited by rupees 9,000. Okay, then for the year ending 31st/3/2017, higher vendor account debited to bank account because for the payment of installment. Okay, then for charging of depreciation, depreciation account debited to machinery account. Okay, this entries remains the same, the last three entries for a single year. Higher vendor to bank for the payment of installment, depreciation account debited to machinery account, and this one for the transfer of interest and depreciation to statement of profit and loss account. Okay, so here depreciation will be debited by rupees 9,000 because 20% is the rate of depreciation. So 20% on the cash price, it is 9,000, the amount of depreciation. So 9,000 will be debited with, okay, with depreciation account, and machinery account will be credited with rupees 9,000. Then the amount of interest, that is 1950, okay, and the amount of depreciation, that is rupees 9,000, okay, will be transferred to statement of PL account. Okay, statement of PL account. So these three entries, okay, this one, and this one, the last three entries for the first year, okay, for a single year will be same under both the methods, full cash price method and asset accrual method. Okay, only the first, okay, like for the payment, okay, higher down payment being due, okay, payment of down payment, then okay, installment amount being due, and payment, sorry, the first three entries installment amount being due. Okay, only this, okay, there are changes only in these three entries, rest three entries are same. Now for the subsequent and years, okay, that is second year, third year, fourth year and fifth year, these two entries are not required to be passed, this one and this one. Okay, you have to omit these two. Okay, this is for the matter of down payment, okay, down payment due and down payment of down payment. Okay, only these four entries will be passed, okay, for the next 4 years. Okay, so that is how, okay, journal entries are passed under asset accrual method in the books of hire purchaser. Only this is required. Hire vendor account is, okay, in the books of hire vendor is not required under asset accrual method. Okay, you just have to know books of hire purchaser. Okay, so it is very important, okay, for your exam, and you know how to pass, how to prepare ledger accounts. Like you have to prepare machinery account, hire vendor account, interest account, depreciation account, the statement of profit and loss account, and you know how to do the ledger posting, okay, and take out CD and BT. Okay, only that much you have to do in this sum, that you will do by yourself, okay, in your rough copies. Okay, I have just made, okay, try to explain you the critical part, okay, and make it easier for you. So only this much is important, okay. So if you like my video, please the new subscribers, okay, sorry, the new viewers, subscribe to my channel, okay, share and comment, and okay, so thank you for today.